The COVID-19 pandemic has affected millions of lives globally and brought with it a great deal of uncertainty and risk to economic growth. At the same time, it has also put industries in the position to face and embrace new challenges. In the eye of a pandemic, rebooting the Indian financial services sector, a leadership series by Refinitiv, partnered by ET Now, is bringing together the industry's leading voices to address key questions surrounding economic recovery and the role that the banking and financial services sector will play in it. To understand the innovations and technological evolution of banking and financial services, Sarah Debuscher, Director Customer Success South Asia from Refinitiv, spoke to Firoz Aziz, Deputy CEO Anand Rathi Private Wealth Management, Dipesh Shah, Head IFSC at GIFT City, and Akbar Khan, CEO Credit Enable India, on the topic digital transformation within banking and financial services is the trend here to stay.
We start with Akbar first. I read an article mentioning that in the UK, the SME loan applications are seeing a spike in over 2,000% in SME loan applications. It's a staggering figure, and it's actually a true reflection of the seriousness of the situation. So I want to understand, how big do you see a jump in applications for you?
I think what you've quoted is really, consistent with what we're seeing in the Indian market as well. Talking for our business, I mean, if you just compare our numbers in terms of registrations that we've been getting, in January of this year, pre-COVID, we were receiving about 3,000 registrations a month. In June, we actually clocked over 25,000 registrations. So that's really a greater than an 8x increase. So while the reasonings in different countries could be different, the numbers are clearly exponential. And in India, I would say there's two reasons primarily. One is because given COVID, a lot of the offline originators as well as the not so tech-enabled marketplaces have not been able to cope with the necessary demand, which is why they're coming on to digital platforms. And the other side is the actual borrowers themselves, concerned about their health, etc. They'd rather not interact, face to face with their lenders or go to branches, etc. So they are also far more comfortable in approaching their lenders on a contactless basis. So clearly, what you've seen and quoted in the UK is happening in India as well.
In this whole COVID pandemic, what changed in the way you interact both with your customers as well as with your employees?
There's a lot which has changed over the last few months in both these human interactions, corporate with client, employer and an employee, or the relationship with employees in itself. The communication has dramatically changed. One thing which has changed is that you are able to now display the organizational might far better. On a digital platform, getting all the representatives who are the backbone of the organization to the front end. You would probably have a few more people in a Zoom meeting or a digital meeting than a physical meeting. So I think exhibiting organizational might and bringing smoothness to that has gone up dramatically. From employees, I think if I say what's way different is the training mechanism has now become more capsulated. For example, all our private bankers go through a 1-hour training in the morning, which never would be the case. You would have long drawn day trainings, which made them a lot ineffective. Now it's far more effective because you are giving 1-hour capsules of training. That's changed. I'm just giving you illustrations of the ease of communication which this digital environment brings for us. And I think that's a big boon in a business where you are transmitting conviction verbally, not just in a written fashion.
What we see is that electronification does not stop, right? And there's nothing new about that. But what is the most challenging thing is trying to determine the second order effects of electronification, right? That's what we really look at. And algo trading is one of them, like I just mentioned. However, there's also the whole regulatory compliance system that is currently under pressure, right? IPOs, trading floors, they really struggle with compliance. Many rules, actually, they all of a sudden don't notice they don't really make sense. And this actually is testing the whole ecosystem, how it works, and it reveals how those ecosystems might be working together apart, right next to each other. So how is that and I'm asking this good question specifically to Deepesh, how is that from a regulatory compliance perspective in India? Or governments fast enough to catch up on this, to help out? Were you hitting barriers? And where on the curve are you with this?
We operate in an international financial services which is absolutely regulation based. You need a very, very innovative regulatory system in order to operate international financial services. So for us, what we have seen is it is like making or breaking the deals. If you don't provide the ease of doing business, why would someone come to a financial center? It needs to get to the business on day one. He needs to be able to interact with the regulator at ease, and should not be the compliance should not be an extra burden in order for him to operate his day-to-day function. I think if with that principle in place, most of the businesses can then be able to be given an environment to grow. Otherwise, sometimes your compliance and regulatory cost and time spent is not justified with the way the businesses that you are doing, because you have all sorts of players, small, mid, large players, and everyone is not able to spend equal amount of time and money to do the things in their own way. So what we believe is that the ease of doing business, which is now obviously based on the technology, the more you help them to be a technology-driven, compliance-oriented institutions, the more better for you, and the AI would help you to figure out which company is complying, which company is complying, rather than taking hundreds and thousands of paper documents, and which nobody opens unless and until there is some issue on a given day. Then only you open those files and see what went wrong. The digital way of complying and a digital way of figuring out where there exists a non-compliance should be the way forward for most of the regulators globally. And we have seen with this International Financial Services Center in GIFT, the new regulatory authority has just set in, and you've seen the chairman of the new authority talking of going entirely digital format in the day-to-day interaction with all the units in terms of their application to their supervision. Everything is getting into a digital mode.
I would like to know, if you have to give some advice, right, what is the best practices that you see in your respective sectors? What is the biggest learning that you would take from this disruption? And also, do you see this as something that you will standardly integrate into your operations for the next coming years? Like, is this going to happen every 2 years? How do you see it going forward? What learning do you suggest for the audience, and how do you see this being integrated? Deepesh, maybe we can start with you there.
I think in terms of the new processes, I agree that a lot of new things have started coming in with the way that we are operating. So new processes have really started kicking in most of the companies operating in our financial center. In terms of learning, I think what we are seeing is more and more the awareness of an uninterrupted type of an environment for businesses is becoming a need of the day.
So if you ask me what's the piece of advice I would give to the wealth management industry, my colleagues in the industry, I would say that pandemic taught us to measure risk numerically, because risk has in our industry been a very English word, high, medium, low. I'm speaking very specific from my industry standpoint. I think numerical measures, just like a bank treasury operates, that's what I think needs some degree of adoption from the industry. Second piece of advice is that, second piece of learning is processes would be made, and errors in following of process could cost more. So I think process and following it through with right implementation of processes is the clear learning. And the third, some adversities are going to be unique in nature. Unlike the previous financial crisis, like the global financial crisis, where you had a crisis, but you had people working more hours from office, unlike in the month of March, where you have the markets crashing and you don't have anybody at work. So the uniqueness of adversity, I think there has been some innovation at the God side as well. So he's given you a very unique adversity. So being prepared for stuff like that, I think has been already.
I think it's a learning that we've had as an organization, and that translates into a bit of advice that I can give, which is really around understanding your customer behavior in terms of whether it's digitization or how he wants to interact with you. Clearly, you'll have events like COVID, demonetization, which accelerate your businesses, but you can never really force onto your customers to take on and adopt certain things unless it is a need for them and something that you engage with them to help them understand that adoption. So that was a big learning for us. So, you can't just generally decide that I will build this technology and, people will come. It's really taking your customers along with you through this journey. And as I said, there will be points in time where there will be easier levels of adoption by your customers, but you've got to be close to them right through the entire cycle and the journey and take the benefit of certain triggers that will, accelerate it. But there'll be other points in time where you'll have to carry them with you, carry them along with you and work with you. So really that customer behavior and understanding them is hugely important and a big learning for us.